Morning folks, so I promised I would get to some discussion around Labor's proposed changes to negative gearing and 50% CGT discount. So I'm going to have a crack at it. There's just so much to discuss. There's no way I'm going to be able to get through all of it via this medium, but I'll give it a crack. I think I'll break it up over a couple of videos. We'll see how we go. So this one, I guess, sort of an intro, a bit of a summary of my thoughts. I think you already know, I'm very concerned about the proposed changes to negative gearing and the 50% CGT discount, in particular the negative gearing. The discount is a bit of a harder one to argue, but the gearing I have a real concern about. First thing to understand, when we say negative gearing, most people think property. Negative gearing is not just property. Negative gearing is when you borrow some money, use it to invest, the interest you pay on the borrowing is more than the income you earn from the investment, and therefore you incur a loss. And currently you're able to reduce your existing income by that loss, and therefore you pay tax on the reduced amount, which makes a lot of sense. Let's say you earned 75,000, but you lost 10,000 on your investment. Therefore, you've only got 65,000 left, so you pay tax on 65,000 instead of paying on the 75,000, which would be the case if these changes come in. So it applies to any investment. It doesn't have to be property, shares, managed funds, could be anything, but of course most people equate it with property, and the Labor Party are equating it to property. But their proposal goes far beyond that, so it's important to understand that. So my understanding is the need for the changes, the policy, is predicated on the idea there are three problems that need addressing. The first one, the main one, being that in Australia we have a housing crisis, we have a housing affordability problem. That there is a sizable portion of the population who should by rights be able to buy a house and can't because property is too expensive, and property is too expensive because of negative gearing. That's the first problem their argument needs to be addressed. The second one is that there are a small minority who are taking advantage of these rules and getting unfair advantages personally by using them at the expense of everyone else, and this needs to be stopped. And then I guess the third one, sort of overriding as a combination of as a result of the combined 1 and 2, is that there are a reasonable proportion of the population who are just unhappy and suffering and being held back because of these current rules. So let's briefly, I'll go through each one of those now, and then I think I'll do a separate video discussing each one in a bit more detail. But starting off, housing crisis, housing affordability. Look, I don't see it. I don't believe there is a real housing affordability issue in Australia. Certainly not across the 80% of the population that don't live in Sydney. Property in Sydney is very expensive. It's a global city. It's one of the global capitals. Property is hugely expensive in New York, London, Paris, Tokyo, etc. Sydney's the same. Nevertheless, we've seen the city market cool off. Now, I wouldn't suggest we should be making laws around taxes just because of markets going up and down. Anyway, so the market having cooled off is not really a reason one way or the other. Changing tax laws, it's a much bigger issue, and it shouldn't just be made based on current market conditions, which are cyclical. I believe in the forces of the market, supply and demand. Yes, property prices are expensive, there is a limit to how far they can go, because if they go too far and people can't afford them, then people can't afford them, and then they'll come back down to where people can afford them. Natural supply and demand, which I do believe in to a large extent. Now, of course, there is the one real variable in property, and that's the availability of credit, of lending, of how much banks and other lenders will lend to someone to allow them to buy a property. And that has obviously increased historically, and that's helped prices increase. For me, that's the lever you pull if you need to keep tabs on property prices. It's the availability of credit, because then that allows the natural forces of supply and demand to do their work. I don't believe our availability of credit was that bad, certainly on a world scale pre-GFC. That's why we survived the GFC so well. Since then, it's gotten tighter, it's got harder to borrow, and that's continued to be the case over the last 10 years, partly because of government policy, partly because of bank policy. And then that's continued even further recently with the fallout from the Royal Commission. There's some things that came out of the Royal Commission that I really don't agree with, mainly on the lending front. Financial planning stuff is a separate issue, but nevertheless, it's had an impact. So with all that, I just feel there's no need for a tax law change to try and address this problem, if this problem even exists. I'll talk about it a bit more maybe in another video. The second point, a few rich people taking advantage. So I've been an accountant, tax advisor, business advisor, financial advisor for over 20, pushing 25 years. I can assure you the very, very vast majority of people that are using negative gearing are ordinary, everyday Australians, employee Australians, working Australians. These are people who are looking to fund their future themselves instead of relying on the government. That's a good thing. They're people who are looking to give themselves a financial base, which is a good thing. Readies them for problems come along in life. And that's, when people are financially sound, they tend to be happier, they tend to be more productive. It's a good thing. Or they're looking to start something, specifically, more often than not, start a business. So they're looking to get a financial base to do that, which is a very good thing. Highly, highly underrated by anyone who's never owned a business. But business is just so important. It's the lifeblood of our economy, and therefore, in my view, our country and society. So I don't believe it's just a few rich people using these things to take advantage and to pay less tax than they otherwise should. A lot of the time, the rich people, they're already rich, and they're not looking for investments that cost them money in the early stages. They're looking for investments that start making them more money. Anyhow, number 3. If you're presently unhappy, you're not satisfied with where you are in life, you feel like you're being held back in Australia, I would really encourage you to reevaluate. We live in one of the greatest countries in the world, at the very best time in all of history to be alive. The luxuries we all enjoy, including those at the bottom financial rung of our country, are still amazing and something to be grateful for relative to much of the rest of the world now, and certainly much of the world throughout all of history. And there are so many opportunities, endless opportunities, to change your position or improve your position, if that's what you want. I don't believe that hardly anyone in Australia is genuinely being held back by anybody else, or any government policies or anything like that. There are so many opportunities to grasp, to get yourself to where you want to be, if you really want to be. So, I don't know, look yourself in the mirror, answer honestly. If you're unhappy with where you are you there because of your own choices, because of your own actions, or highly likely inactions, because of your own fears you weren't able to overcome? I suspect there's a pretty small minority who are able to blame it on somebody else or something else. And even if you are unhappy with where you are currently at, I really encourage you not to take it out on the rest of us, not hold the rest of us back, to, I don't know, make yourself feel a bit better. Yeah. Alright, that's the first. I will have a crack at going into a bit more detail about each of those points shortly.